All right, there we go. Well, I think so. It says we're live. Somebody let me know in the chat everything's coming through loud and clear. In the meantime, we'll go ahead and get it started. Yeah, I don't know. It says excellent connection, so welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:05 p.m. Eastern Standard Time on February 19th, 2023. Appreciate that, Hex. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's up, Big Papa? Good to see you. Good to see you. All right. So yeah, let's go ahead and jump in and take a look at what's going on here. Let's go ahead and start with Bitcoin, with crypto, and then we'll work our way backwards. Since not much has happened in the last couple days. And the stock market's not going to be open tomorrow anyway. So we got plenty of time to spend on the digital coins. What's up, Mustafa? Good to see you. Hey, appreciate you appreciating. All right, so let's take a look at the futures market and see what's going on here. So obviously futures closed up here at 24,835. Pretty strong close, not only for the daily, but for the weekly as well. And then we see that little gap down and a little bit of pressure since then. And obviously we're seeing currently spot market under pressure at the moment. So here we see this push down here to the blue slope line, which we would expect to act as support. And when it does, we get a nice bounce. And then it looks like we're going to decide either to roll back over and test it as support again or continue to the upside. Obviously, we don't know right now, but when we look at the stochastics, we see the hard sell signal. We exited the bullish control zone, powerfully angled to the downside. We see at least a temporary bounce on the blue stochastic, attempting to come back up here. You know, if nothing really happens, we just go sideways. These are going to cross back to the upside. We'll get another hard buy signal and potential to continue on. And, you know, essentially what happened, we're in a downtrend. We consolidate, we push up, we get back above the 200s, start consolidating. And then, honestly, on a long enough time frame, we just go back into a bull market. So worth paying attention to. Obviously, the daily looks pretty good now, starting to look the best it's looked recently. When we go out to the weekly on the futures chart, we see that was the perfect retest of the 200 simple, which was our target the whole time. We've been expecting a test of the 200 exponential and simple. We got it. So now, of all times, you know, we were able to capture quite a bit of crypto gains on the way up. I know a lot of other people in the trading group were as well. Some of you guys, again, do better than I do because you're willing to go a little further out the risk curve, which is totally cool. That's awesome. And the truth is here, you know, we had a nice little rip to the upside, but now we got to kind of be neutral again because here on the weekly, we're in between the 200 exponential and simple. So we do technically still have a positive slope on both of them actually right now, but you know, this is the decision point. So we're at a point that's never happened in all of history, not just on the futures chart, but on the spot chart as well. We're basically back testing the 200s from the bottom. And we know when you're in a bull market and then you go sell off, break down below those, back test them. If you get rejected, you go into a bear market, which, you know, we can just switch over now to the spot market because there's not a lot that's going to tell us that this isn't. When we switch over to the Bitcoin spot market, we see that weekly retest was the 200 exponential and simple. And this is basically, hey, we've been in a bull market the whole entire life cycle of Bitcoin. You know, the blue moving averages are holding up the price. And now here we see for the first time ever, we break below them. And now they're acting as resistance. So if we were going to expect or predict or, you know, really factor into our future trading, investing, whatever you want to call it, for crypto, well, right now, in my opinion, right now is the worst crypto has ever looked. I mean, you could argue it looked worse right here, or maybe it looked a little worse right here, or maybe right here. But I mean, in all of its life, if we're looking at the worst portion, you know, the absolutely technically worst crypto has ever looked. And we're looking at a 245-day period where we consolidated below here. And, you know, this is obviously Bitcoin's life cycle, at least the majority of it right here. And, you know, we're talking about 30, oh my gosh, 605 weeks. So, you know, obviously over 10 years. And then we're looking at this little period right here. And this is the worst crypto, the worst Bitcoin has ever looked, technically, based on those moving averages. So I'm not particularly eager to be like overly bullish right now, even though we're seeing some like flashing bullish signals. I'm more right now still just like quick to pull the ripcord on the parachute and just lock in those gains. So right now on the weekly, we're retesting resistance. The 8 and 21 bull cross has taken place, which we were bearish this whole time when it was crossed red. Now it's crossed green again. You know, we could get a situation like this where it gets threatened and then we get a surge to the upside. This was a really nice move, and we were very happy to partake in that. So, you know, what if we do get a push up here and we come up to like 30, 35, 36K? You know, we want to participate in that. That's 50% from where we're at right now. So we want to participate that, even if we're going to go lower eventually. Maybe we get rejected right here and go lower. Maybe we never see these lows again and we only go higher. Either way, we want to participate in that, but we don't want to be overly risky. And right now, we can't have conviction like super heavy in one direction or the other. What I do like here is lower lows on price action, higher lows on the histogram. You know, multiple green histograms above the zero line, blue slope line. What I don't like, you know, all that into resistance. I also don't like that the stochastics were all the way down at the bottom of the range here. You know, stochastics were at like 17 inside the bearish control zone. They shot all the way up and they're at over 80 now. So we were all the way in the bearish control zone and now we're all the way in the bullish control zone, which means, you know, essentially, if you're looking at this as 100%, which most of the time you don't go in the lowest 10 or the highest 10. So really you're looking at like the 80% middle is like the area where you partake. We basically just went from what the lowest, you know, what the 20-point mark is basically like the bottom of the barrel all the way up to the top. Now, could we go from 80 to 90 still? For sure. The same way we could have went from, you know, 20 to 10. But the fact of the matter is we spent all that energy right here on this little itty bitty move right here. And the last time we were up at this level, you know, which is basically where we're at now, we were just inside the bullish control zone for a minute there. The last time we were in the bullish control zone was way up here at the all-time high. So in that time, we came all the way down to the bottom on all of our momentum indicators and dropped all the way down to here. And then in this little itty bitty period of time right here on the stochastics, we moved all the way back up. So maybe they cool back off, maybe they chill out, we consolidate, we put in a higher low, and then eventually we bang our head on resistance enough. We like then can surge to the upside. We can get up to 30, 35, 40, maybe even new all-time highs. Sure. But at some point in time, we know for a fact the stochastics have to cool back off on the weekly because they just got way ahead of themselves. We had this pathetic itty bitty little move right here, which was great. Don't get me wrong. I'm always glad to put it in my pocket. But it's worth paying attention to. That's all I'm saying. There's definitely some mixed signals in these markets right now. And the more I hear other people having conviction, the more it makes me happy that I don't have conviction in what's happening here. Because people, if anybody that acts like, pretends like, tells you, swears, you know, whatever, that they have conviction in the markets right now, I mean, unless they can tell you their system straight up and why they have conviction, it's probably some bullshit fundamentals or, you know, something that could easily flip and turn around tomorrow. Because I'm going to tell you right now, I like how the Bitcoin daily chart looks right now. We were in a long bear market. We consolidated. We put in bullish divergence. We burst to the upside. We're back on top of the 200s. If we're going to start a new bull market, this is how it starts. There's no other way a bull market starts but what's happening right now. But also, this could fail and we just go deeper into the bull market. Or, I'm sorry, bear market. We do see, obviously, a bunch of red histograms in a row, and then we see the bounce around the zero mark. We see a bunch of green histograms in a row, and now we're backtesting what is still a blue slope line. If this rolls over right here, it's going to look like a rejection, and it's not going to necessarily look good. We're going to, you know, right now, the danger is that this is our high right here, and this is a much higher high. This is our high right here, and this is, if we get 2 red histograms in a row, call it 3 if you want, you know, a little extra confirmation. But that's going to print massive bearish divergence. Substantially higher high, substantially lower. Now, doesn't have to happen. If this just curls back to the upside, price action goes sideways, and then this goes to a new high, it will invalidate the potential bearish divergence. But, I mean, let's be careful here. Get the bull cross on the stochastics, moving pretty aggressively to the upside. And then if we look at our last, basically like we were up inside the bullish control zone that whole entire time through here. So we're nowhere even near that right now. So, and price action's already higher. So one of two things, we either have a ton of fuel left to continue to the upside and the stochastic just keeps moving up, moving up, moving up, and then eventually goes higher than 94, 95, and we don't print bearish divergence, or no matter what else happens, if the stochastic doesn't go up here to a new high, we will print bearish divergence. Look at the knife right here. Massive knife stab to the upside, saying that the buying volume peaked out back here. This is when people are really buying. This is when people are excited. This is when they were going all in. And then this was the most recent move right here. Substantially higher price action, substantially less buying interest, you know, after this big breakout here. So be very, very careful that this is not just some distribution taking place. If we do come back down here, then we're potentially setting up for either support and we go higher, or head and shoulders and we break down and go lower. If we do go lower, that's best case scenario. We actually just put in a higher low and then we can continue into the bull market. So there's a good way to spin anything. Something bad could happen and it could be good for the market. Something good could happen. It could be bad for the market. The truth is, right now, it could go either way. And I hate to be, you know, kind of in the middle on stuff. But I mean, that's just how it is, especially when you look at different time frames, because we're not getting a clear picture from one time frame or the other. And to me, it looks like we're going to at least have some kind of bearish divergence play out, like short to medium term. And when we go to the shorter time frames as well, we always talk about this. You guys have heard me say it a billion times. I mean, to the point where it's, I'm sure, just ridiculously redundant. But when we see a strong uptrend take place right here, we get bullish on the 4 hour. Everybody got bullish at 17K. We know that. Everybody partook. We move to the upside, and then either the 821 bear cross takes place, or we threaten the 200s somewhere along the way. You know, maybe you take profits. Maybe you're waiting till we break down below the 200s and they flip back red again. Whatever your system is, the fact of the matter is, once the 200 exponential is under the 200 simple, or the 200 simple is on top, what do we say all the time happens? The 200 simple is on top. That means the market is losing momentum. Oftentimes, price action continues to a new high, takes out the previous high. We print bearish divergence, and then we break down, and that was the top. So is that going to happen this time? The exact same way it happens every other time? The same way we talk about it in advance all the time? Well, we'll have to wait and see. We don't know, but probably. Let's be real. So here we are getting ready to test that previous low right here. So this was our high, and then we put in a low, and then here we didn't put in a new high on the 4 hour in between that high and this high. So that means if we come down here and we take out this low, we then have a high, then a low, then a lower high, then a lower low. That's going to look like a short term, you know, downtrend or consolidation or correction, whatever you want to call it. And then likely that brings us back down to the 200s. Maybe we threaten the low down here, et cetera, et cetera. So we're seeing some signs from the market, at least temporarily. Now, how could this manifest in a way that actually would surprise people? Well, we start seeing this weakness in Bitcoin, and then suddenly actually altcoins surge because everybody's just putting their money in there. So let's keep an eye on the Bitcoin dominance chart as well, because this could be a strong Bitcoin rally in the beginning, and then people are like, well, you know what, F it. Made good money on the way up here. Let's diversify into some of these trash bag coins because this is the new bull market. And then they spread out into them. Bitcoin gets weak. Altcoins stay strong or get stronger. And then just for, you know, again, I would never turn on the 1 minute chart normally, but just as an example here too, in case you just need to see one more, this is our strong uptrend happen. And you know, oh my gosh, it's crazy. The strategy works on every time frame. That's nuts. It's like someone designed it that way. So we get above the 200s right here. We go in a pretty aggressive uptrend. We come back down, retest 200 simple on top right here. We come up here, can't get to the new high, come up here again. We get the new 15-minute close, and then right after that, what happens? We break down. So just it's something to pay attention to. It's not always going to happen. It doesn't always work. But what it shows you is there was strong momentum, and that was keeping the 200 exponential on top. And when that momentum starts to fade, the 200 simple will cross above it. And it's the same way on the downside. We said it right here. What is this? This is the exact same situation, but opposite on the Bitcoin daily. The 200 simple is pink. The 200 exponential is blue. So red. The 200 exponential is on the bottom, saying we're still moving to the downside aggressively. And then here we see the 200 simple actually crosses below the 200 exponential. What happens after that? We go on to put in a lower low, the lowest low. And then after that, we get back on top of them. They flip bullish. And that was, at least in the meantime, that was the bottom. So that's the exact inverse situation of what's happening right now on the shorter time frames. So it's worth paying attention to. I'm sure it means nothing. It's probably just mumbo jumbo. So Ethereum, just hanging out, staying above there. Nothing really, you know, none of the altcoins are really going to give us a good idea right now, because the truth is everybody's looking at Bitcoin. If we start to see like sudden strength in Ethereum, you know, we could pay attention to it. But most of the alts aren't even looking particularly great right now relative to their moving averages. Sometimes the percentages look bigger, but total crypto market cap on the weekly. So here we are on the weekly, looking a lot like the Bitcoin chart. Here we're back above the 200 exponential and simple. Both are blue again, so that was an important close. We have obviously a resistance here at 1.146. So essentially at this point in time, we're trading kind of like inside this little channel right here, pinched in between these two areas. But again, picking up momentum, looking decent. The only thing that I don't love about this chart is that we went all the way from the bearish control zone to the bullish control zone, and this is what we got out of it. This little itty bitty little bump right there. So momentum in our favor, blue slope line. Looks very, very similar to the Bitcoin chart. Okay, Bitcoin dominance. This is everything, stable coins included. Picking up momentum, blue slope line, all green histograms. You know, 821 bull cross. Seems likely we're going to come up here to like this 48 level, retest the top of the channel. Again, we came all the way from the bottom of the range to the top of the range, bullish control zone. We only moved up about half the way here. Could we get one more leg up as it kind of consolidates? Yeah, probably. But we use a lot of the energy just getting back to like that half or 2/3 point. So, and then if we take out the stable coins and we look at Bitcoin dominance compared to the altcoins, we see it's still fairly strong. We're still 821 bull cross to the upside. We're still consolidating with higher lows consistently above the support line. What we need to look out for here is we're starting to see a little bit of weakness. We tried to get above the slope line a couple times, and it does look like it's starting to roll over now. So that would correspond with essentially Bitcoin weakening and altcoins starting to gain back some of the market cap, which typically corresponds with an up move, not a down move. It's very, very rare that altcoins gain market cap as Bitcoin and altcoins are going down. They almost always gain market cap when everything's going up. So that would tell us that if we start to see weakness in this Bitcoin dominance chart, hard sell signal coming out of the bullish control zone, potential rejection off the slope line from below, and now it's flipping red. If we don't see some almost immediate strength from this, which honestly is probably my base case scenario, is that this actually is just a fake out and pushes back up here and gets strong. But if we don't see that, if we see the breakdown from this level, we're probably going to start retesting these lows back here at 46, 44, maybe even the big boy low down here. And if we get down there, I mean, look, call it what you want to call it, but I mean, that's probably a crypto bull market, which means the money printer's back on. So Matic still just absolutely clapping those cheeks. So, you know, if you missed out on the first Matic trade, the 53%er right here, that thing busted. And then, you know, you had the opportunity to get back in here with the 85% trade. We didn't quite get there yet, but I mean, come on. The first 65% is done. We did it. Obviously, it's been a phenomenal couple weeks, couple months. I mean, geez, so much opportunity. And for sideways markets too. You know, if you were just sitting on something just hodling or whatever, you know, maybe you're up a little bit or whatever, but if you're not locking in those gains and we end up at new lows, you know, whatever. Or if you were just dollar crossing on the way down, sure. I mean, you ate the big dip, you got some cheap buys in, but how did that really help your account? No, we don't want to be hodlers. So Matic still strong here above the 200s, probably one of the strongest cryptos. 786 seems like the likely target, the 821. Are we going to come all the way back down and retest that 130 level? We might. It's possible. BNB still stands pretty strong up until recently. This last push up is where we really saw this start looking a little bit weaker in comparison to some of the few strong cryptos. I mean, Binance still looks better than most cryptos. Still on top of the 200s. 200 exponential still blue. 200 simple. I mean, it's technically like pink right here, but I mean, come on. You know, it's basically just flat. It's sideways. We did break down below the slope line. Pretty aggressive Stokes moving down here, trying to cross back to the upside, fighting to reclaim the 821. Man, it's Binance looks weak right here. It looks like it's ready to roll over. Maybe it doesn't, and it's just a fake out, but I don't know. I would not be surprised to see Binance under 300, like in the very near future. That 382 and the 200s are just absolutely crucial. And, you know, the crazy thing about this is it looks great because it's up, you know, whatever percent since I was calling for like its potential death. And then I talked about how this was an awesome trading opportunity. 25% it's up since then. But I mean, the truth is this thing is it's still so close to danger. I mean, this is just all trapdoor city, bloody waterfall down to like $40. There's zero price action on the way up here. This is just a gigantic air pocket in Binance. And, we're trading inside this little channel right here. It's cute because we're at the half. It's cute because we rallied off the bottom. But, I mean, the truth is, this thing is not far off of just hitting that air pocket. I mean, 32% down before it drops by, whatever, 80+%. I'm not saying it has to happen, but if there's one crypto, I would be legitimately concerned about holding right now. Of all the crypto space, all the trash that's out there, Binance is a credible company, credible, coin, exchange, whatever. But the potential of that 86% downside right now is just disgusting. I'm sure it won't do. It'll probably just go straight to 1 million. I'm sure everything's fine. It's fine. Hodl. But I save the 10% on my trading fees. Oh, but Binance coin went to 0. That's so funny. Yeah. So just like a little anecdotal story, but basically a friend of a friend, we'll just leave it at that, was essentially saying that they had a quote unquote investment blow up. Basically, something that was paying them the equivalence of a dividend suddenly stopped paying them that, and then actually they just lost all their money too. And this person said that they weren't even that mad that they lost all their money. It was more upsetting that they weren't going to be getting the regular payments anymore. Think about how stupid that is. Think about how actually stupid that is. So you're not even mad that all your money's gone. You're just mad that you're not going to get that little interest payment on your money anymore. Because it's gone. Because it's all gone. Makes sense. It just shows you how stupid people are and how people think. So Dow Jones. So, I mean, again, it's hard to be bearish on this thing. Basically, right now, what we're looking at is we have a, flagpole up and then a consolidation. That's how I look at it. We can get all fancy and cute and talk about the potential, inverted head and shoulders or like coming back down to like key support areas. We can do all that like cutesy stuff and get an idea of, what could happen and all that good stuff. But the truth is, I mean, we have a leg up here. And then we basically have from our peak, I mean, something along these lines. And we're essentially, I mean, and that's almost like too perfect. And you're like, you just draw this stuff ahead of time and then it makes it look like it's perfect. No, it's just there. Everybody else watching the same thing, I promise. I mean, but this is it. We're consolidating in this range perfectly. Because this draws itself. The top is drawn already. From this point right here and this point right here. So it's regardless. So even when we come back down here and then we draw the bottom and that's where we're at. So now we're squeezed between this top resistance and this bottom resistance right here, and we're squeezed in this itty bitty little area right here. So when the market decides what it's going to do, it has 1% to the upside or it's technically a breakout. It has, closed like 1% to the downside. It's technically a breakdown. So this is it. We're in the tip. We squeezed it all the way to the end. We waited as long as we possibly could. Obviously overall this is bearish, but here we're back on top of the 200s. That's bullish. We had a leg up and then now we're having a consolidation inside essentially like a symmetrical triangle. I mean, that's a bull flag. That's like literally the definition of a bull flag. If you were like, hey, what would be like the ideal scenario for like a market to bottom into a bear market, progress into a bull market, consolidate, and then break out to the upside? Like, what would it look like? I'll be like, well, let me just show you this exact chart right here because that's it. I mean, that's like a textbook, switch from a bear cross to a bull cross. And if we break out right here, I mean, that's it. New all-time highs on the Dow Jones. Okay, I know people don't want to hear it, and they're like, what are you talking about? Da, da, da. It'll never happen. Well, I mean, the chart says yes. My mind's telling me no, but this triangle is telling me yes. Sorry, you had to participate in that. SPY is next. S&P 500. I mean, it's not quite as good as the Dow is, but it's above the 200s. 200 simple is flat. 200 exponential is, bullish now. Hard sell signal. Bunch of red histograms. It looks like it wants to come back down and test support. And the goal here, the only thing that really matters is, like we've been talking about, is just holding ascending support. It doesn't even have to be this exact channel that we have drawn here, even though it looks decent. It doesn't have to be the 236, doesn't have to be the 200 moving averages, doesn't have to be the breakout of the descending broadening wedge. None of that has to happen. It doesn't have to do that. All that we really, honestly, honest to God, just simple as can be. What do I want? Simple as can be. We don't want to take out this low. This is our lowest low. We don't want to take that out. Ideally, we don't want to take out this previous low. So we have this area. This is our line in the sand, a new lower low. We have this area, which is our last low right here. So honestly, sure, I would love to see this spot right here hold. I would absolutely love to see this just be the honey pot, okay, that just holds, and then we just crush up here, you know, and this is our measure move from the breakout right here. We obviously are inside this channel, so, you know, maybe we come back down, test the bottom of the channel, and then we're back at the top of the channel. You know, that little move right there takes us up a good 11%. We're already the majority of the way, the measure move back to the new all-time highs. I mean, it all looks good. That's building structure, as simple as it gets. But the truth is, it could come all the way down here, and that's fine. It could even come all the way down here, put in a macro double bottom, and that's fine. I'm still okay with that. It still looks bullish. Not as bullish, though, if it just picks up right here. If this finds support right here, and we start moving back to the top of the range, we're going to new all-time highs. I mean, it is what it is. People are going to be like salty, and they're going to talk about manipulation, and the markets are fake, and blah, 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 blah. Okay, so if I told you the end of a horse race before it happened, and I tell you, actually, you know, horse number, whatever, 22 is going to win the race. And then you go, oh, yeah, whatever, da, 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 and you don't bet on it, you don't do anything. And then after it happens, you just go, oh my God, I can't believe horse 22 won the race. It's such manipulation. These markets are rigged. Like, horse racing is BS. Like, I can't believe they don't regulate this stuff. Who's the stupid one? Okay, assuming it's not illegal what you're doing. Okay, who's the stupid one? Okay, the person who sits around and complains that the markets are rigged and it's all BS and it's so obvious that this isn't natural price action. Is that person stupid for not taking advantage of the situation? I mean, because that's how it looks to me. If these markets are so easy and everything's so manipulated and all this stuff, why aren't people just participating in it? Why sit there and just be like Mr. Pouty Face? I'm mad. I don't like it. And I'll just sit on the sidelines for 10 years. And I'll just invest in gold because this sound money into currency. And you just don't understand the difference. Okay, have fun staying poor. Like, I mean, sorry. It doesn't make any sense. If it was that easy, why not participate? Assuming it's not illegal. Obviously, I would never tell you to do anything illegal. So triple Qs, same thing. Looking right around the S&P. This is the one we really want to watch for weakness, obviously. 821 bull cross here. We're back above the 200s. They're basically flat or positive. So this is it. I mean, we could fail right here, roll over, and that's fine. We just have a series of lower highs and lower lows. A high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, potentially a lower low. I mean, that's probably what's going to happen. But as long as we're above the 200s, you know, if you're going to bet, if you're going to manage risk off of a certain area, if you're going to take a shot at the bull trend, why not do it off the 200s? Hard sell signal, left the bullish control zone, bunch of red histograms at support right here. So if we do break down, we want to see a higher low. And again, in some situations, this percent is a lot different. You know, basically, if we come down here, we're 14% away from new lows. So as quick as we could bounce up here and see a nice little rally, we could very, very easily see this roll back over too. And depending on which time frame we look at on which asset, like the weekly triple Q, you know, basically weekly bear market back down to the 200s, find support, pushing back to the upside. All we need to do is just put in a higher high and this starts looking pretty damn good. Again, bullish divergence, blue slope line, Stokes powerfully angled to the upside, all green histograms above the zero line. Basically buying support. I mean, this is the opportunity of a lifetime. What do we always do? We say when we're in a strong bull market, we buy support. So you don't get a chance to buy support ever this whole way up. Oh, there's some support. Better buy it. There's some support. Better buy it. Buy it. Buy it. Buy it. Now we don't want to buy it because the fundamentals. I mean, there's definitely some risk in the market for sure. But I mean, at what point in time do we just say like, hey, let's take a little risk? Don't go crazy, but the monthly could go either way. I mean, it looks a little worse, obviously, on the Qs than it does on like the Dow and stuff. We got a couple green histograms here. We're coming out of the bearish control zone. But as of now, it looks like we're retesting the 21. And it looks a little rejection-y. Now, we still have like 9 days to figure it out. So, you know, anything could happen in the meantime, but it looks a little rejection-y. Now, if we start closing back above 305, I mean, let's not deny it anymore. It's a bull market until it's not. That's all there is to it. And I think that's the thing that everybody has to decide right now, okay? Because it's okay in this little point right here to try to figure out if it's a bull or bear market and not know, you know, if you want to be long or short. And it's okay right here to not know if you want to be long or short. But there's a very, very limited amount of time where it's okay before you're either in denial that we're going up or in denial that we're going down. And that's what we want to avoid. So Russell looks better than most, honestly, well above the 200 exponential and simple. We do see, you know, some weakness here rolling over, but we're holding support and we're kind of just creeping to the upside, which isn't necessarily great, but okay, so damn, do we want to talk about this today? What time is it? 31 minutes in. Let me jump in the chat real quick while I decide. How's everybody doing tonight? Let me know where you're at and how you're doing. Let's see. So Hexaball says critical pivot for Bitcoin. Yeah, for everything, man. Hex looks good. Never heard of it. What is that? Is that a new stablecoin? Link also looks promising. Yeah, I mean, if we go into a bull market from here, all trash cryptos are going to look good for sure because they're just so beat down. Last CPI print looks rather bullish. I don't think so. You just dropped R. Kelly on us. The Dave Chappelle R. Kelly is the funniest thing ever. What's up from France? What's up, Crypt? What is that? Crypt Yellow Vest? Oh, yeah, that's definitely French right there. The Yellow Vest. Doing good in Michigan. Okay, there you go, Papa Paint. Oh, yeah, good to hear. Good to hear. I'm glad everyone's doing well. So, all right, so let's take a look at this. So this is the US M2 money supply. We're just going to talk about this real quick. You can only look at it on like the monthly increments, but you know, essentially everybody talks about the money supply and oh, they put up the money supply and then they make all the money and then the inflation and all this and all that. Sure. Over time, this is the trend. Going back to 1960s, this is the money supply for dollars. So it's just, I mean, it's basically trending up like steady. So sure, the numbers look really big here at the top and they look really, you know, a lot smaller here at the bottom. But, you know, that's just how exponential stuff works. But as we can see here, this is basically just a straight line, straight white line right here that I put in from 95. And it just essentially just tracks perfectly with the money supply along the way. And then here, obviously, we know what this was. This was the Rona, and they suddenly printed, you know, the equivalents of like, you know, at first it was 10, 12, 15. But, you know, when it's all said and done, we had 15 trillion. And then we peaked out here at about 21 trillion. So they printed about, you know, roughly like 40%, depending on what metric you're using at. So that being said, now we're starting to roll back over and it's starting to come back down. We see the moving averages were far away from each other, the two green lines. And now here they're tightening back up. They're converging. And we've broken below the 8. And now we're getting ready to retest the 21. Maybe get a little bounce around here or something like that. But eventually we would just, you know, the thing we talk about all the time is a reversion to the mean. So in this case, we have this ascending support line here, and the reversion of the mean is basically just coming back down to that support line. So that would be the money supply could go sideways until 2025, and then we're at 21 trillion, but that's it. We're back on target with where we've been for the last, since 1995, so quite a while. Or maybe we just drop all of a sudden tomorrow, and, you know, Federal Reserve does their thing, and by, you know, March, we're down here at like 18.5 trillion. Regardless, though, that's, I think, in my opinion, somewhere around there, you know, the reversion to the mean, something along that, where the money supply slowly comes down, we get back down to about 20 trillion, and then we get kind of picked it back up here, et cetera, et cetera. So that's the M2 money supply monthly. So let's go on to, actually, I want to look at these indicators with you guys as well before we move on. So obviously we see, you know, each one of these peaks is typically going to be like even just more ridiculous than the last one. We see a bunch of red histograms, still blue slope line, but obviously we know it's rolling over. There's no surprise there. And then if we look at the Jewel Thief and we look at the stochastics, this is sort of alarming because this was our big drop in the 70s. Obviously we know what that is. There's no surprises there. This is our big drop in 93. We know what that's all about. And then again, shortly afterwards in 95 as well. And then we see one more big drop down here in 2004. We see another big drop in 2010. And then, of course, so we essentially know what that is. That's the inflation gets out of control. The Federal Reserve cuts, creation of debt, money supply, all that good stuff. Well, this one is much more violent, much worse, much more aggressive than anything we've ever seen in the past. I mean, we can see this is like ridiculous. Our stochastics are down here at 57 right now. And the lowest we've ever even seen them on here, going back to like 1960, is 81. So what we're seeing take place in the money supply right now is a big deal. A really, really big deal. But, nobody's acting like it's a big deal. We're all just kind of like, oh, whatever, the 40%, this, that, and the other, the Fed's tightening. It's a real damn big deal. And we can see with the momentum on the monthly time frame for the money supply. And what is the money supply really? The creation of credit and debt. What is that? It's the expansion of the economy, of the GDP, of the spending, of the, Ponzi scheme, whatever you want to call it. All right, so moving on from that one. So now we know what the M2 money supply looks like, the increase, everything that took place over the Rona when obviously they just printed a bunch of money. And now we know that socialism doesn't work. So if you were ever curious, hey, does socialism work? You're like, yeah, sure. If you want to literally just tax away the buying power of people and make everything cost 40% more going into the future, definitely just give away money. So M2 velocity now is what we're looking at. So this is the velocity of M2. So it's just how many times that same dollar gets spent back into the economy, but it's domestic only because once it leaves your shores, it goes to another country. It's not on there anymore. So it's only on, domestic goods, services, etc. So we basically consolidate in this range from the 1960s till essentially like the 1990s. We basically have this little like kind of channel we're operating into, whatever. And then we go like parabolic through here into the late 90s, early, 98, 99, 2000. And then that's where essentially we peak out on the velocity of money at over like 2.0. Now, part of that is because of extra exports or, exporting jobs to other places, exporting production to other places, et cetera, et cetera. But we see since then we trended down pretty aggressively and we're very clearly in a monthly bear market. Well, what happened right here? Obviously, this big drop right here happened right before. This was our pandemic drop. This is April 2019 and then October 2019. And then we literally January 2020, and then we fall off the cliff after that. So everybody just says, oh my God, I don't want to spend any money because I don't know if I'm going to have more money going into the future. I'm not sure what's going to happen, whatever. So we bottom out down here like 1.1, start consolidating a little. Money velocity starts ticking up. And it's important to understand the relationship between M2 money supply and M2 money velocity, because the two have to kind of counteract to keep that target on track. Because essentially, if we have too much money velocity and not enough actual money supply, they can balance each other out. Or if we just make a bunch of extra money supply, even if we don't have the same velocity, we can still kind of balance it out. Hang on one second. All right, so we know there's obviously like a relationship between the two of them. And if one starts slacking, the other needs to kind of pick up that slack to keep us on that trajectory. So this is you can put this on your chart if you wanted to, but this is the US M2 money supply times the M2 money velocity. And if we look at this again on a long-term time frame, we can see it basically just trends up and towards the right. We see a couple like aggressive dips at times. Obviously, this is the Rona dip right here when we see the velocity fall off a cliff. But we also see that spike in M2 money creation, and that essentially counteracts the lack of money velocity. So again, when we talk about like the reversion to the mean and everything, if we just basically take a trend line here and we just look at this once again, we're basically just right on trend. There's nothing crazy right here. We went below trend here. We went above trend here. The reversion to the mean take us back down somewhere around that level. So the relationship between these things is very, very important, because everybody talks about inflation and money supply as if they're just these super like simple things that are in no way dynamic whatsoever. But that is the exact opposite of the truth. The truth is they're extremely, extremely dynamic. If suddenly the dollar was to weaken substantially, it was to become extremely, extremely weak. Let's just say it fell off a cliff and nobody wanted dollars anymore and everybody threw away the dollar system. The actual velocity of money would pick up substantially, because suddenly when we go to buy something from another country inside the USA, it would cost a ton more money. So we'd be less likely to buy that. We'd be more likely to buy something domestically. Therefore, that money gets circled throughout the economy more often and the velocity goes up substantially because the dollar has weakened. So there's so many little tips inside like the scale in here that can change things drastically in one direction or the other. It's very, very important that we don't just look at this with a single lens and say, oh, because they printed a bunch of money, this is going to happen. Because money velocity is low, this is going to happen. Because there's a bunch of levers right now, and you've got some mad scientists behind the curtain pulling levers, and they don't know what the hell is going to happen. And we know that because inflation is transitory, obviously. And then, all right, that's enough of this. I'm probably boring the hell out of you guys. I know this stuff's not fun, but it's very important to actually pay attention to. So, okay, so we made it through all that stuff. Let's go down here. Let's take a look at DXY. So we've been talking about TNX and DXY. Obviously, saw a little strength there. They got a little weakness at the end of the week there, but we do see the bullish divergence on DXY. The back test of 200 exponential. Next target would be the back test of 200 simple at 106. Seems like if we consolidate here for a little bit, we're going to get that pushback up here. At that point in time, we can start talking about, you know, rejections, denials, dollar going lower, weakening, and what kind of effect that's going to have on the markets. But if we see this continue to trend to the upside on the shorter time frames, like daily or even weekly, we have to be careful what kind of pressure it's going to put on the actual markets. Because when we zoom out here and look at the actual weekly chart, you know, we basically had flipped this into a bull trend. The 200 exponentials on top of the 200 simple, we had an aggressive sell-off, a back test, and now we're attempting to reclaim those moving averages with multiple green histograms, you know, coming from a very low level inside the bearish control zone, and now potentially putting in, I mean, the hard buy signal's there now, and we're very close to exiting the bearish control zone. So when we exit this bearish control zone and we have the hard buy, that typically corresponds with, you know, some of the best opportunities to pick a bottom in something. So if that's going to be the bottom in the DXY, there's very high probability that's going to be the top in risk on assets, you know, gold, crypto, stocks, whatever. So we really, really need to pay attention to what the dollar is telling us, because on this weekly chart right now, the dollar may have been getting beat down for a while and it may still look kind of weak right now. But I mean, this looks like a healthy move up followed by, you know, a healthy correction, potential for another healthy move up. So we'll see what happens right here. Obviously, anything could happen, but we've already cleared the 236. The next target for the internal retracement from the high to low right here would be the 382, and that's also some key levels from some of our other like fibs and whatnot. 105.83 is right around that level we're watching. This is the real area to clear, is the 0.5 and that 108 mark. So we'll see what happens. Could we get a little deeper retrace and that's just an A, a B push back up, and then we go C lower? Well, that would just give us our retest of the 200s and our deep retrace target. And that would also mean we get one more leg in the stock market, in crypto, and whatever. And that leg could last months or even potentially years. All right, and then we have Tesla is next. So Tesla back testing the 200s here. We really got to see how this one plays out. Obviously, we took profits on the Tesla trade. It was very profitable, very nice. But again, everybody that hated Tesla all through here, now they love it again. So we know that they're dumb. We know they're brain dead retards. They loved it the whole way down, and then everyone hated it at the bottom. And now after it's moved up to the upside, now they love it again. So we know they're dumb. So whatever people want or think or believe, we should just do the opposite. I mean, not literally, but it's worth paying attention. So the fact that everybody's really, really high on Tesla right now and all that tells me, hey, let's be careful here. We already took advantage of some nice moves to the upside, left a little gap behind right here. Let's not get greedy on this one. And we're seeing a lot of weakness in some of the other big names. Microsoft broke above the 200s, back testing it. Still okay for now. We don't want to see it going lower. I mean, really though, best case scenario, it holds right here, consolidates, and then starts moving higher. If it breaks down below the 382, then it's going to look like we're coming back down to the 0.5. But again, these things look good because of this little move that they had right here. But we had a pretty similar move right here that took us back down to the lows again. So I want to be real careful with these things. You know, getting all hyped up because of ChatGPT or OpenAI or, you know, whatever the new bubble is. Look, if you're hearing about it now, it's a bubble. I mean, how long has AI been around for? Now suddenly everybody's talking about it because they can generate some images or, you know, search some results or whatever. Nothing has changed in the industry. Just people were quote unquote under allocated. Just be careful what you're getting into. I had to look at a couple of those companies, and we're going to talk about it soon, and got to be real, real careful. So Apple is next. Aggressive move back above the 200s, holding for now, still staying strong. Seeing a little bit of weakness here. But again, it looks like it's about to do the Microsoft and just come back down to like 147, and then we'll see from there. Google looks very weak, broke back down inside of the little channel that it was forming between the 382 and the 0.5. Strong rejection off the 200s, failure to hit the measure move breakout, and now it's back down here at the heart line of the channel. Again, I'm just looking, if it comes back down to the 0.5 again, I'm going to buy it again. I'm going to just do the same trade over and over again. You'll be like, how's that Google trade working out? And I'm like, you mean this one? You mean this one? You mean this one? Hopefully. Meta is next. So we talked about this little setup right here. You guys know I don't really trade Meta. Everybody's got to draw the line somewhere. Still on target. It's about halfway through that breakdown. Still looks like it wants to retest the 200 exponential and simple, close that gap. Bunch of red histograms. Yeah, I mean, it looks like it's headed there. Probably not going to go straight down, but Amazon is next. Again, rejecting at the 200s. Back down here, looking weak. Some of these big names. But, you know, honestly, when I look at the Stochs right here and we say they were in the bearish control zone, went all the way to the bullish control zone, that was the move up right here. And now we're almost back down inside the bearish control zone, and it's still way up here. I mean, if this thing just goes sideways for a little longer, I mean, it's almost too late now. That 821 bear cross about to happen. And when it does, it probably does break down. The key on this is just wherever it stops, hopefully the 886, you know, a higher low, that's probably going to be a buying opportunity. At least short to medium term, because it's almost exhausting too much on the way down. Histogram is about to bounce the slope line. I mean, we almost always get a bounce, even if it's to a lower high. Sometimes we even print that divergence, and this thing comes up to the 0.5. So, I mean, realistically, you know, this, obviously, this Amazon setup played out nicely. It's all done, whatever. You know, we hit the target. I mean, is that the next move up there? But just from here instead? It probably is. It probably is. I mean, we'll have to see. There's not a great way to place a stop down there, but there's probably going to be some kind of really nice opportunity right here if we do get that pullback. So we'll see. If 786 doesn't hold and the 886 does, that's going to look like a nice buying opportunity, at least for a scalp. Maybe not going to hodl it to the grave, but it's worth a shot. So gold. So we have this channel. Came exactly to the top of the channel. We touched tips. Like literally touched tips. Now we're retesting the 200s. I mean, 200 exponentials right here. 1800. 200 simple and Heartliner at 1773. I mean, it looks like we're probably going to find some support around there, at least short term. It's pretty exhausted on that recent down move. Again, nice move to the upside. Decent little correction. Could very easily consolidate before the big breakout that takes gold up to 20,000. Or, I mean, I made that up. Whatever it is that the gold bull people say. It's like something made up that's just absolutely ridiculous. Because I know you were like, 20,000? What the fuck? Maybe I will pick up some of them shiny rocks. 0.5, 200 exponential and simple. The heart line, it's all right here. You know, I mean, are you going to trade this? Maybe some paper gold. Maybe some of that paper gold. I mean, that's really what you're looking for right there. Now, if it gets nasty, 618, still bullish. If not, it looks bad. And it just consider, I mean, the danger now is obvious. There's no question in anyone's mind that this is a high, a low, a lower high, lower low, another lower high. So it needs to find support right here and break out, or it's just going to look like another lower low is coming. Gonna have to bury the gold for another 20 years, Karen. Looks like we're not cashing in. Not just yet, anyhow. Silver, again, same thing. Weak, just getting rejected at the 200s. Just going to do what gold does. GSG, this thing looks very, very rough right here. had a little gap back down to support, the same support that has held a bunch of times. And each time, I mean, this is our high, come down here, we bounce, a weak little bounce, come a little bit lower, weak little bounce, come a little bit lower. I mean, what are we going to get? Another weak little bounce, and then eventually we're going to roll off the table, and the bloody waterfall takes effect. And that's probably going to take us down to like 18, which is our target. LNG, again, looking weak, consolidating here for a while, and now getting a little breakdown. Going to threaten these lows very soon. What happens then will be a big decider. And actually, I'm not going to get into it on the screen. I'm not going to get into it right this second, but earnings coming up on LNG. So I will put this out before Thursday because we got some information here that's worth looking at on LNG. And spoiler alert, it looks fucking nasty. Looks nasty. And just for like comparison purposes, we're going to take a look at Total Energy Services, aka the TOTE, and then also Shell, Royal Dutch Shell Company. They sell shells and then also artificial shells, and there's some gas too. But yeah, we're going to take a look at those three, take a look at their actual like earnings and everything, and you know, basically eliminate two of the dog shit ones in favor for one that's actually good. But you'll have to stay tuned to find out in this week's video. It may come any day, but definitely before Thursday. All right, so hopefully you're intrigued. Mosaic, so it had that disgusting, ridiculous stop hunt right here, that beautiful manipulation. Now it's just retesting the 200s, consolidating, trying to pick a direction. Stokes moved all the way back to the upside, and it's at resistance. So we got to be real careful it doesn't just roll back over, retest the lows. AMD had a nice little breakout, back testing the 200s now. You know, we could see this come all the way back down to that resistance right there. You know, a lot of the stuff that looked like it was breaking out and looks like it was going to be clean sailing is not looking so hot right now. So it still looks okay as long as we're holding, you know, the 382, the descending resistance, which should be support, the bottom of the channel. I mean, as long as this area is holding, but if we start losing that 382 on a daily close below that, you know, or honestly, you know, if you just don't want to turn a winner into a loser, there's definitely time to make sure that stop loss in the right place, or, you know, that mental stop loss, whatever. Visa, same thing, broke out, had a nice little move, took it back up to the 786. This is the line in the sand. I mean, 886 never stops price action. If it goes to 786, it's either double topping or blue sky breaking out. And it got rejected at 786, coming back down. You want to see this hold, you know, it's basically strong resistance at this white line in the 618. So if we come back down to it, it needs to hold. 200 exponentials turning up, breakout. I mean, these things, these back tests right here are literally what I look for as the absolute best buying opportunity. Now, granted, this one's better, but this isn't as clean of a breakout right here before that move up. And that's the one we were obviously trade set up off of and everything. But if we get a second one, and it holds, I mean, sure, maybe it comes down here, we take a couple positions, and then actually the market's weak, it breaks down, you know, inflation picks back up, or, you know, whatever it is, you know, another train crashes, or there's a weather balloon, or some cop bangs everybody in her station, whatever the new news, you know, whatever that we hear about. Maybe it rolls over here, you know, we end up out of that trade, we take a shot. But this is the area I want to take a shot at when the market's looking like it's flipping bullish. ACB, so pot stock's looking absolute trash again. Yeah, I mean, these look terrible. There's so much potential, but I mean, does it all just get flushed straight down the toilet? Probably. It probably does. Probably does. I mean, nothing has really changed on them. We're close to having a potential breakout or just another in a series of rejections. And you're like, this is the one. I'm like, I don't know. They've been saying that for the last 99 times it got rejected and went to new lows. Nothing has happened on Lulu in literally months. Home Depot, we talked about. Yeah, I think that's it. I think that's all we had. The Airbnb, we talked about. I got a couple we're going to do a look at. Yeah, okay, so that's it. We did it. Made it to the end. Relatively good time. All right. Doing good in Michigan. Hexaball says doing great. No, the money supply and velocity is extremely interesting to me. Awesome. Well, you and me. That's it, Hex. Nobody else cares about that shit. But it's worth paying attention to because the way that you make up for the lack of velocity is by increasing the supply. So people understand that. That's simple. You're like, okay, if people aren't spending enough money, you just make more money and give it to people and they're going to spend it, right? Sure, that makes perfect sense. Everybody can understand that. A child can understand that. If a child has $5 and that's their only $5, they're less likely to spend it than if they have that $5, you give them another $5, they're more likely to go out and spend that other $5. So what if you give them $20 or $50 or $100? Well, now they're definitely going to spend the 5, let alone the 100 that they just got. Maybe they'll keep 20 of that and spend, so the idea is that you can pick up the velocity by creating, or you can make up for the lack of velocity by creating more supply. But it's the same way as well. If velocity suddenly starts picking up, if people gain, and what made velocity go down is lack of confidence. Okay. It's that thinking, this is my last $5. This is my only $5. I don't want to spend it right now. And then everything's on sale tomorrow. And I bought 1 marshmallow today when I could have gotten 2 tomorrow. Like I'm going to feel like an idiot when everybody else has got, the double marshmallow cheeks. And I'm just over here like still got the little flavor of my first marshmallow from yesterday, but that's it. I overpaid. I ran out. So people hold on to that money because they don't know when they're going to get more money. So when they have the promise of more money coming in, a healthy economy, good job, a raise, a consistent income, confidence, they're more likely to go out and spend that money. And then again, when we start taking into account the weakness of the dollar, if the dollar continues to get strong, money velocity is going to weaken. It's going to continue to be weak because the money, even if it is getting spent, like if you have that same $5 and you spend that $5 on a glass of lemonade from your next door neighbor and, a wagon ride from one of the other kids in the neighborhood and, $1 at the fair and this, that, and the other, and you spend it all locally, the money gets recirculated back inside of the economy, the velocity picks up. But if you spend that $5 on something from China that you bought on Amazon or whatever, that's it. It's done, gone. That's somebody else's money velocity now. Like that's their countries. They're getting that. So the idea that the dollar or DXY weakens, if it substantially weakens, that gives Americans less buying power outside their country. So it makes the goods inside their country much more competitive. Because if I go to buy, a cookie from Debbie next door and it's $10 because she has to pay somebody minimum wage and there's all kinds of regulations and she had to get a permit and all this stuff to bake a cookie. Or you can just go on Amazon and you can buy a cookie shipped to your doorstep. It'll be there tomorrow from some other country and it's $3. I mean, I'm going to buy that cookie, obviously, all day. Maybe get 3 of them for the same price. Who knows? But if suddenly the cookies are the same price, because the dollar is so weak, I can still buy commercial goods with it the same way relative, but I can't buy imports with it because our currency is so weak. That means I'm more likely to spend inside the country, so the velocity picks up. So as we move the strength and weakness of the DXY relative, as we move the money velocity relative, as we change the money supply and right now constrict it, all these things are like, pushing and pulling on different strings and levers and everything. And we could see some massive, massive unintended side effects. And I think the dollar strength right now is causing a lot of unintended side effects that people didn't account for. And if the dollar continues to strengthen, if yields and DXY decide they're going to surge and break back to the upside and start heading back towards those highs again, markets are going to crater in a way that we haven't seen before. And some will stay strong, others will be weak, the difference between domestic versus, foreign, et cetera, et cetera. But there's a lot more to it than people are looking at right now. And everybody's trying to look back and say, well, it's just like the 1970s. Oh, it's just like the 1930s, the 1920s, the 1980s. It's not just like anything. It's completely different from any situation we've ever been in. And I mean, if you just need a quick reminder, of something we've never seen before, I mean, the money velocity the money supply just always forever trending to the upside. And this one little blip right here is where we see it kind of like tightening up in like 95. And then it starts to pick back up to the upside. And when we get, nice little spike right here through 2008, that gets us basically out of the recession. That's what it is. They print a bunch of money, get us out of the recession. Well, that's what they did right here. Avoided the recession, avoided the lockdowns, give everybody money to pay their bills. So as this reverts the mean right here, the distance away from the average that we are means this could be something disgusting, this unintended consequences or unforeseen, level of move. And the markets just doesn't realize it yet. Maybe that's higher for longer. you know, monetary conditions are tight. Maybe somebody goes under. Maybe all of a sudden banks aren't as strong as we are. I don't know what it's going to be. I don't know what it's going to be. But I know we're watching. Like a gator creeping in the swamp. Ready for Karen's dog to just get a little too close to the water. Just a little too close. But yeah, that's it. We'll wrap it up there. Hope you guys enjoyed the stream. Appreciate everybody tuning in today. It's 9:05 p.m. Eastern Standard Time on Sunday, February 19th, 2023. Markets are closed tomorrow, but we'll be back at it on Tuesday. In the meantime, hopefully everybody had a great weekend. Everybody enjoy their President's Day. If you are off here in the United States, show respect to, you know, those who have come before, who ruled this country, who arguably have slowly diminished it, the world, not just the country, into what it is today. I mean, I'm still a proud American, but damn, sometimes we got to look the other way on some stuff. I mean, the war machine's enough to just get me pissed. But anyway, let's call it there. I appreciate everybody tuning in today. That was fun. Look out for those static videos. I'll see you guys on Wednesday, 8 p.m. Eastern Standard Time. Appreciate everybody tuning in. Glad you guys enjoyed the stream. Let's wrap it up there. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research. Trade responsibly. All right. Later.